Hi, this is Dylan Jovine. Today I want to share with you an investing strategy that works in any market. I've used this strategy myself for 35 years, and I borrowed and learned this strategy for people that have used it for decades, like Warren Buffett, Peter Lynch, etc. And the goal of the video is I want you to learn how to protect your wealth, preserve your wealth, so that when stocks get expensive, you're not left holding the bag when the market turns and there's a crash. I also want to show you how to turn crashes into the greatest opportunities, the greatest money-making opportunities of your lifetime. A crisis is always the best time to make money in the stock market. The good news is, and I say good news, is that since the year 2000, we've averaged one crisis or one market crash every 4.8 years. So that's basically, you think about it, in 2000, we had the dot-com crash. 2001, we had the September 11 attacks crash. We had the 2008, 2009 financial crisis, the real estate crash. We had the 2020 COVID crash. And of course, we had the 2022, 2023 inflation crash. So sometimes the market crashes because of impossible to predict events like 9/11 or the COVID crash. And when the smoke clears and the panic passes, there's like a snapback rally after both of them, which is great. But most of the time, before a crash, the warning signs are there for everybody to see. They're just obvious there. And we see those warning signs right now in the market. For example, the Buffett indicator, market cap to GDP, is at an all-time high. The Shiller PE index is not ever been this high since the dot-com crash. So we see these warning lights flashing, danger, danger. And it's time that we prepare ourselves for what we know is likely to be a hard hit against a wall. The reason I wanted to create this video is the biggest mistake I see people make is they ride entire stocks up during a bull market, then they ride them all the way back down during a bear market. And as we learned in the 2000 dot-com crash, stocks could stay low for a decade after a crash, especially bad ones. So today I'm going to show you 4 steps to prepare for a coming market crash. Because again, it happens every 4.8 years. And again, we see the warning signs flashing right now. Warning. So step number 1, sell your most speculative stocks. Remember something, all stocks go down in a market crash, but the most speculative ones go down most and hardest. But what is a speculative stock? The good rule of thumb that I like to use is a company that doesn't earn consistent profits. So it is not uncommon for stocks like this to go down 80 to 90% during a market panic. And many of them could take years to recover if they ever recover at all. So given that the market is right now selling at historical highs, and we have such large issues like debt and inflation, debasement of currency, I would sell any of these stocks as soon as I could. Step 2, take the money you've gotten from selling those speculative stocks and invest them in federal money market funds. So now that you've sold your weakest positions, the next step is to put that money to work for you while you wait. My suggestion is to take that extra money and put it into money market mutual funds, but not just any money market funds. The safest ones are funds that invest in short-term U.S. government securities and or repurchase agreements. So, you want to invest in short-term government securities where the interest that you're getting is really the high end of the yield curve. And a good example of this is the Vanguard Federal Money Market Fund. The symbol is VMFXX, Victor, Mary, Frank, X-ray, X-ray. That is a good example. Okay, now step 3, prepare a shopping list of stocks. For years, you've watched from the sidelines as certain stocks have just gone higher and higher, and people have been getting richer and richer. Facebook, Amazon, Google, Nvidia, Microsoft, Apple, you name it. Now, folks who got in early, they made a fortune, but you missed out. By the time you realized that these were the things to own, it was too late. Not anymore. The great thing about a market panic is that you got a chance to buy all these stocks all over again. It's like getting a mulligan in golf, a do-over. Like, for example, In the 90s, I remember watching Starbucks go march higher every single day. It was up and up and open more stores and more stores in the stock. I watched the stock go from 20 to 30 to 40 to 50 to 60 to 70, all the way to $100 a share. But I never owned a single share of Starbucks. The stock was always too expensive for me. And I knew, though, that one day the market would give me an opportunity to buy that stock cheap one day. I knew that if I was patient enough, one day the stock would come down into my strike zone, my price range. So when the market crashed in 2008, 2009, the stock collapsed to 20 bucks a share. That's when I started to buy. And I happily bought shares all the way down to 13 3/4. It was amazing. Within 4 years, the stock was back at 100 bucks a share. But here's my point. Starbucks was on my shopping list before the crash happened. So were a dozen other companies like American Express, FactSet Research, AutoNation. That's why you have to sit down in advance and write your shopping list of stocks before the crash happens. Step 4, get ready to pounce. The great thing about a market crash is that you don't have to be a financial wizard to make big money. You just have to be mentally and financially prepared. You've already taken the first steps you had to take. You sold your stocks, you've taken the money, you put it in money market mutual funds that invest in short-term US government bonds, and you've written down a list of killer stocks that you want to own, category killer stocks. Now all you have to do is wait. Like a hunter, it pays to be patient. But how do you play it out when the market actually does crash? Let's say that you've raised $10,000 from selling your weakest positions, and you've invested that money in short-term US government bonds. That $10,000, you'll earmark it for 10 killer stocks, category killer stocks. But you don't want to use, you want to put basically $1,000 in each stock, which means you're going to have to steel yourself for one of the most unnatural acts in investing, buying a stock when it's crashing. That's a hard thing for a lot of folks to do. I look at it, though, like I'm buying a dollar for 50 cents or 40 cents or 30 cents or even 20 cents if I get lucky enough. But when should we begin to buy? A good rule of thumb is to look at the company's price to book value. During good markets, great companies tend to trade at 7 to 10 times their book value. For example, Amazon is trading at about 9 times book value. Facebook's about 8. Google is about 9. Visa is about 15. Starbucks also has a price to book value of about 8. Tesla has a price to book value of about 9, 9.5. And Microsoft has a price to book value of 12. The general rule of thumb is the stronger the business is, the higher its price to book value will be. That's because the stock market rewards companies that earn high returns on capital. So using that as an example, I would start buying any of these stocks at 4 times book value or 5 times book value. Let's say Meta, as an example, Facebook, my first $250 would be at 5 times book value. My second $250 would be at 4 times book value. My third $250 would be at 3 times book value. And my last $250 investment would be at 2 times book value if I ever got that lucky. If not, I would just buy it at the other values on the way back up. The great thing about this strategy is you don't need to be a financial wizard. You just need patience and foresight. That's all you need. You just need a little patience, a little character. It takes a lot of character to sit with all that money and do nothing. But that's what we're doing. We're hunters. We've got to patiently wait for the thing to come into our target, into our sights, and then bang. This is how market crashes are how you make 10 times your money over the following 2, 3, 4 years. So it really pays to wait. It's how you could turn 10 grand into 100 grand into a million into 10 million. And the biggest thing you need is patience. Have a great day.